Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. Let's bring in Andy Swan. He's a co-founder of LikeFolio. Welcome back to the show, Andy. Do we have Andy's audio here? We're just having a little bit of...
Let me test it again. Let me talk to you and see.
There we go. We got you now.
We got you, Andy. Welcome back.
No, yeah, good to be here. Thank you.
All right, so we're talking Costco. The stock's had a pretty good run in 2023 on this one. And it seems like, Andy, I always look at Costco as one of those names that always has like a pretty good satisfaction level as far as the people that are members of Costco and that use it and go there all the time. I mean, I don't really have many bad things to say about it besides it's crowded all the time. What kind of data do you guys have out of LikeFolio on this one?
You know, I would say it's pretty much just a mixed bag, and it kind of falls along the lines of kind of everything that just makes sense and really you would expect when you think about where the consumer's at right now. So, you know, overall, they report their revenues on a monthly basis. So the quarterly earnings report is never a huge surprise. It's never that big of an event because you've kind of got everything you need to know in hand. But what we're seeing at Costco is a nice growth in revenue that's really been driven by the sale of grocery and staple food items. So people, you know, food prices, as you know, have started to really increase a lot and hurt people. So they're moving some of their shopping over to Costco from, more niche grocery outlets to save some money. And then when we think about that, the Costco versus Sam's Club perception, Sam's Club is seen as a little bit more the Walmart of bulk shopping, whereas Costco is a little bit more the Target of bulk shopping. And so we do see a little bit of a happiness advantage for Sam's Club because their members are saving a little more money. So, I think what's happening here is people are shifting their shopping to these companies, to the bulk providers in order to save money. They're really keying in on the grocery side of things, where Sam's Club has a little bit more of an advantage versus Costco. But at the same time, while Costco's maybe losing that battle in happiness by a little bit, what's happening is there's a flood of people coming to these membership bulk pricing places. Number one, because they want to save on groceries. Number two, they want to save on gas. And so this is the place where you can get that done, whether it's Sam's Club or Costco. They continue to see large gains, over 6% gains in overall membership. And so I think that's the big story, as we go into this earnings event, is that, both Costco and Sam's Club are becoming more and more in the daily or weekly routines of customers across the country. And we expect that to continue because, quite frankly, it's really tough to argue against saving money where you can right now, especially when it comes to food and gas, which is the two spots where these companies, really dominate.
Andy, they've got 69 million people shopping at 853 warehouses. They sell a massive amount of goods for incredibly low prices. Their 12-month profit margins, 2.5%. It's
right.
Virtually impossible for any small or startup company to compete with their margins. The fact that it's too good to be true is probably the reason why it is too good to be true, and that is the valuation on the stock is extremely high for its history and this sector in general, Andy, but there is no really bad news. It's kind of like me. It's big, it's ugly, but it's likable, right? I'm Costco in a way, if you think about it. So what's the hesitation with a company like this?
So the hesitation, I think, is twofold. Like you mentioned, anytime you're running on 2.5% margins, I think Costco would love to have more customers in its electronics department, buying those things where they can get a little bit more juice out of the customer rather than the grocery items or the gas, because I think those are probably the two spots where they have the least wiggle room in terms of profit margin. The other hesitation that we have, looking at LikeFolio data, we do see a correlation between Costco's web visits, which we see as down fairly significantly, and Costco's kind of confirming that. They said, e-commerce comp sales were down 2.5% year over year in August. So things are slowing down on the e-commerce side, which kind of just goes along with this overall theme that people are going there to save money on groceries and gas. They're joining to save money on groceries and gas. And, I think if you're looking at the long-term bet here, the membership growth is the most exciting part of this. And that is they've got more people getting used to shopping in the stores. And so when it is time to replace that LCD TV or their mattress or something like that, it may be Costco that they lean on to do that. And then Costco can expand their margins a little bit. I think that's the long-term bet here. That's what the market's counting on.
Andy, when I look at this, you said web visits, down on a 30-day moving average. See, I kind of equate that to maybe a positive because, you use your membership, and I think people consistently go back to Costco because they have a membership. And when I'm in Costco, I like to go there as opposed to go to the website because that way I can pick up the 5 things I didn't go there for to purchase those also. So I think foot traffic matters more to them. But when you look at this company, you said the sentiment as far as happiness is a little bit below Sam's Club, but they've got better brands here and they've got the membership on top of that. So the membership is a big part of the revenue that they generate. They have room to raise prices. They haven't done it in 6 years now. But looking at all that and your data, is this thing a buy going into earnings?
Yeah, we're neutral. The one thing that I think would make it a buy would be, if we could get, Costco to say, yeah, we're going to raise membership prices because members are flooding in the doors. I think that's the one thing that the market's ready to react very positively to. And the other thing I will say, going into a Costco earnings is very different than going into Target's earnings or Dick's Sporting Goods earnings, in that we don't have to worry about lift. We don't have to worry about theft. There aren't, people roving gangs of teenagers running in there to grab everything they can, because you have to show your membership card to get in and you got to show your receipt to get out. They've got it pretty well locked down. And so I think having that worry off the table after what we saw happen with Dick's and some of these others is a really positive going into this earnings as well. But officially we're neutral. I think if I had to bet one way or the other, I'd probably say, why not Costco to the upside? It's a great company.
All right, great stuff, great data as always, Andy. Appreciate the conversation.
Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the data on Costco. Kev, say they raise, so previously, historically, they raised prices on their membership